Good morning. It's Monday, the 29th of September, and this is Govindraj Ethiraj broadcasting and streaming weekdays from Mumbai, India's financial capital, once again totally rained out. The take. Chennai-based TVS Motor will relaunch the classic British Norton motorcycles, among other reasons, to help grow in the United States. Now, this comes 5 years after TVS rescued British Norton from administration, which is bankruptcy, the Financial Times reported over the weekend. Also over the weekend, US President Donald Trump unleashed a fresh set of threats, hinting at more tariffs against those countries or companies that do not invest in manufacturing capacity in the United States. Now, with the threats becoming a weekly, if not daily affair, perhaps it's time to ask, is there a meeting of objectives somewhere here from India's perspective? Now, Indian companies have expanded quite aggressively overseas and actively since the early 2000s. Now, the acquisitions of entire companies or stakes in them have been a mix of brand and capacity. In the case of, let's say, a Tata's acquiring Tetley, the tea company, or Jaguar Land Rover, it was primarily brand and, of course, capacity that came along. In the case of the $12 billion acquisition of Anglo-Dutch steel giant Chorus by Tata's again in 2007, one could say it was capacity and brand to serve local and export markets. The same year, for example, Hindalco acquired Novelis in the United States, a loss-making aluminum rolling company, which today is a $17 billion company and a leader in aluminum recycling and circular manufacturing. Novelis has since acquired other companies and capacities. And as you may have guessed, most cross-border acquisitions of that period were of companies which were in the doldrums for one reason or the other. Indian companies used firm balance sheets, a strong rupee, and of course a desire to expand into new and growing markets at a time when the India economy or the India domestic market was still finding its feet. Now, most big-ticket acquisitions have worked out one way or the other, it would appear, though the chronology and timelines may not have been what was hoped for in the beginning. A smaller example, Bajaj acquired stakes in Austrian motorcycle brand KTM in 2007 too, by taking a roughly 15% stake for about 300 crore rupees, but has also been forced to, in some ways, increase its stakes steadily as KTM has faced various hurdles over the years. Now, KTM motorcycles are seen whizzing around on Indian roads, of course, but also exported to the United States, Europe, and Latin America from plants in China, Brazil, and Philippines, and of course, Pune. Last week, Trump unveiled sweeping new import tariffs, including 100% duty on branded drugs and 25% on heavy-duty trucks. Moreover, the Commerce Department is apparently considering a dollar-for-dollar exemption based on investment in US-based manufacturing only if a company moves half its production to the US, according to reports in Reuters and the Wall Street Journal. Now, how all of this will work is not clear, but many of these seemingly far-fetched ideas have a habit of becoming reality quite quickly. Countries like India, and for that matter China, have of course had fairly clear rounds on on-ground investment as a route to access domestic markets. The challenge with the United States is that it's already on the higher end of value add and labor costs, both in manufacturing and services, and thus may not be the best place to go back to square one or two for ostensible manufacturing glory. An official of the Indian Drug Manufacturers Association told me a few months ago that the manufacturing cost of medicines in the US is prohibitively higher. A Gates Foundation study, for example, published on MedRxiv, recently pointed out substantial cost differences based on regulatory market manufacturing, active pharmaceutical ingredients or API, and finished dosage form production or FDF for the Indian market is 43% lower capex, that's capital investment, and 47% lower operational expenditure compared to the US. And this is around regulatory compliance, facility infrastructure, equipment standards, quality control, and of course people costs. And yet a dozen companies, at least, including Dr. Reddy's, Sun Pharmaceuticals, or Bindo Pharma and Cipla, have manufacturing facilities in the United States, mostly making generics with the objective of being closer to the market and more responsive, and of course building an innovation ecosystem, while of course a bulk of the products do go from India. Now the question really is, does anything from our past track record suggest Indian companies can grow in the US with local manufacturing? The answer is a little mixed. Indian companies surely bring or take manufacturing talent and management capability to run, expand, or streamline businesses, as in the case of the Aditya Birla Group or, more recently, the pharmaceutical majors. But there is some nuance in how these expansions happened and the fact that they were driven by both opportunistic and market imperatives. If you look at Norton and KTM or Chorus and JLR, it would appear that these were global plays driven by the opportunity to grab a company that was in tough times. Of course, these are mostly in Europe. Now, can Indian companies enter the USA from a position of strength today and set up capacity like Ford, GM, Toyota, Honda, BMW, and Hyundai did in India many years ago? Again, it's tough to say because unless there's a clear brand and domestic market play, the economics are stacked against such moves that's going into the US. Ford and General Motors, by the way, as we know, have left India and have found that leaving India is tougher than getting in, as a recent Wall Street Journal article pointed out. A larger question also is, do companies and business leaders operate better under gunpoint, in this case being tariffs, or strategic advantage over time? Creating capacity to keep the Trump administration happy today may prove counterproductive in a few years if a new administration changes its mind. But building locally with a long-term view is feasible. Indian companies can surely do it, at least in some sectors, as they are already. But more importantly, for that, they need policy certainty, which of course is exactly the same problem foreign investors complain and point to when asked to invest in India. And that brings us to the top stories and themes for the day. The stock market see the steepest fall in 6 months, and where could it go now? How can we really upgrade India's judicial system? A BRICS-backed bank may issue rupee-denominated bonds in the domestic market by next year, and why this is important. And Accenture says it will lay off staff who can't reskill on AI.
This is the Core Report with Govindraj Ethiraj.
The markets drop. India's benchmark equity indices, the Sensex and Nifty, were down about 2.5% for last week, their steepest drop since late March. Persistent foreign institutional investors selling amidst fresh waves of tariff threats increased the downward pressure on markets and kept them down. At this point, we've also passed a full year since the September 26, 2024 market peak, to which we've not returned or regained or, of course, surpassed, which, of course, means that the markets have not been very kind to investors over the year. They're about 5.5% down, though things would have been a little better had you invested earlier this year. That's if you did. On the other hand, a quote attributed to Samco Securities says that of the top 750 listed stocks, only 245 have delivered positive returns, while some 485 are in the red. 20 of them were listed after 26 September 2024. So the median return is a negative 11% or 11.5%, and the average return is about minus 6.25%. So what this means is that there is much more lost if you look at the wider spectrum of stocks than if you were to look at the index alone. Moreover, mid-cap, small-cap, micro-cap indices have all underperformed the Nifty, falling between minus 8 and minus 9% over the last year, according to that report. On Friday, the markets were down, as we said, for the sixth consecutive session, and the Sensex was down 827 points and then recovered to close 733 points down to 80,426. The Nifty was down 236 points to close at 24,654. The Nifty Mid-Cap and Small-Cap 100 were also down about 2% and about 2.3% each. The rupee continues to be under pressure thanks to those persistent outflows and the continuing tariff uncertainty. The rupee closed at 88 rupees 71 paise against the US dollar on Friday. Not much changed on Friday, but down 0.7% for the week. Its steepest weekly fall since late August, according to Reuters. The Reserve Bank will release data on the country's foreign exchange reserves on Friday, which were last at about $703 billion. The dollar index was steady at 98.4. BRICS bonds. Well, there is once again talk of de-dollarization, and let's see how that's going to pan out. The BRICS countries-backed New Development Bank, or NDB, is going to issue its first Indian rupee-denominated bond in the domestic market before end March 2026, according to Reuters. The NDB, which has previously raised funds in Chinese yuan and South African rand, is in advanced stages of discussions with the Indian Central Bank, that's the Reserve Bank, for its debt rupee issuance, and it will look to raise between 400 million to 500 million through 3 to 5 year bonds in the first tranche, according to sources who spoke to Reuters. Now, of course, as we all know, China and India want more acceptance of the domestic currencies, that's the rupee and yuan. Earlier this week, Reuters says China rolled out measures to support the development of yuan bonds in Hong Kong, and over the past few months, the Reserve Bank has announced steps to allow wider investment options for foreign funds held in Indian bank accounts. The bank's chief financial officer told Reuters that the NDB is working with the government of India and regulators to explore raising funds in the local markets to provide local currency finance for Indian projects. So, Final approvals are pending with the Reserve Bank, and it's not clear at what stage this is. But NDB has been planning to tap the Indian rupee bond market for some time now, but there have been delays because of delays in approvals. Multilateral agency says Reuters, like the World Bank's International Finance Corporation, have previously issued rupee-denominated bonds in the overseas and local markets, and there has been strong investor interest. And here's a message from a sponsor. Want smarter investing at your fingertips? With InvestingPro, get real-time market data, custom alerts, and global financial insights all in one place. Join 46 million users already making sharper decisions. Download InvestingPro today. More details in the link below. Can we speed up our judicial system? Now, there is much discussion around judicial reforms, and quite rightly so. But where can one begin to address this problem, and how? And what are the resources it will take? Now, the big challenge is case pendency. Indian high courts and district courts had about 51 million pending matters as of January. This year, 12% have been stuck for more than 10 years, and half the cases at both tiers were pending for more than 3 years. About 82,000 cases are pending in the Supreme Court, according to Dr. Ajit, former Group Executive President and Chief Economist at Aditya Birla Group, former Vice Chancellor at Gokhale Institute of Political and Economics, and now Senior Fellow at Pune International Center. According to him, the pipeline itself has thickened because between 2020 and 24, the total pendency rose by nearly 20%. But he argues that perhaps what is less well known is that the rate of case disposal is quite impressive. I began by asking Dr. Ranade about a recent Mint column that he authored on this subject and what he saw as a way out.
The headline number which often grabs attention is the fact that the total pendency, that is total number of pending cases in the entire court system, that is the lower courts and the High Court and the Supreme Court taken together, is 51 million. 5.1 crores and rising. So that grabs your attention. And, I remember there was some article a few years back and they said if we try to estimate at the rate we are disposing, it'll take 300 years or something. That's a very dramatic way of putting it. So that's the big number, headline number, which grabs attention. But I also wanted to highlight that actually the rate at which cases are being disposed is also amazingly impressive. For example, last year, in 1 year alone, there were 27 million, 2.7 crore new cases filed in the entire court system. And the system was able to dispose 26 million cases. Not the very same one, obviously. Some of them are older cases, some of them are new cases. But that means the rate of disposal, they call it the case clearance rate, CCR, is on average close to 96%. And some specific courts in the country, including possibly some high courts, are actually clearing at a rate of 100% or more than 100%. And some of them, I have told, it's 3 years in a row. The Supreme Court itself, its statistics till last year was quite impressive at 96%. This year in 2025, as of September, I believe the case clearance rate is 88%, which means the court system, it's getting a flood of new cases and it is trying to clear older pending cases, but it is doing a good job of a disposal rate. And this has to be juxtaposed with another very important fact is that the system is working at a very high vacancy rate, what is called the sanctioned strength of courts, the High Court bench, the Supreme Court, the lower judiciary. The average vacancy rate is about 24-25%. So, for example, India is supposed to have something like 26,000 cases sanctioned, 26,000 judges all told, and we have only 21,000. So, roughly 5,000 short. So the average vacancy rate is 25-24%. In high courts, I think it's higher, 33%. The Supreme Court, as we speak now, is fully, the bench is full. There is 34 judges. But the lower judiciary is at 21-22%. So what happens is, we are actually seeing a system which actually is only 3/4, 75-80% capacitized. Its full capacity is not populated. And yet it is delivering 100% efficiency in terms of case disposal rate, the CCR. So a simple arithmetic tells us that if that 80% vacancy goes, if the 20% vacancy goes down to zero, that means if you fill up all the sanctioned posts, I'm not even talking about increasing the strength of the judges. If you just fill up the sanctioned posts, we will definitely be exceeding the case clearance rate of more than 100. We'll go to 125%, which means that we'll start cutting into the backlog. That is simple arithmetic. On top of it, the more serious problem is that we have only 15 judges per population of 1 million. Back in 1987, the Law Commission itself recommended that India should have, I think they said at least 50 judges per million population. So we are way short. Germany has something like 247 or something, more than 200. France has more than 100. So if you look at some other peer countries, we are understaffed and hopelessly overburdened. So that's the broad macro picture.
Okay. So now, in the kind of cases, whether it's the new ones being filed, and you said about 27 million cases are being filed every year, and the backlog, which is there already going back several years, what's the rough composition of these cases? I mean, how many are business economy linked? And
Yeah, that's another thing of big concern is that 12% of, I said there are 51 million cases which are pending. Of these, 12% are actually more than 10 years. The cases being heard or being processed for 10 years, more than 10 years. As they say, justice delayed is justice denied. So if you agree to that principles, we have a serious problem. But not just that, I believe between all different courts, High Court, Supreme Court, and the lower courts, between 40 to 60%, 41 to 60% of the cases are more than 3 years old. So we have a problem that it takes time to dispose of cases. And this reflects in one of the ease of doing business metric. I'm just sort of mentioning its connection to EODB, that dispute resolution, one of the 10 metrics that they use for computing an index of ease of doing business, one of them was how fast is your dispute resolution in case of a dispute, a contractual dispute or something. If your dispute resolution is slow, then that's actually puts a big drag on ease of doing business. So we have a situation where more than half the cases are up to 3 years, taking more than 3 years to process and dispose of.
right. And my question was also on, how many are business, like, for example, tax litigation and so on. I mean, do you have any sense on what that breakup is?
Actually, yeah, that's the interesting thing, that a huge majority are tax related. We have the exact number, but very large number, maybe between 40 to more than 40% are cases where the government is either a defendant or has filed a case. Which means that just to take a typical example, suppose I have an income tax dispute. So I first go to maybe the tribunal, I first go to the income tax officer. Then, I say that I have not owed this, that there's a demand, I have not owed this. So it goes to the officer, then there's a tribunal and so on. And then it escalates, then they file a case, take it to appeal, and typically goes to the High Court and so on. So if you count such things, then the government of India or government, state governments are actually big litigants. And many of them are actually tax related. It could be income tax, it could be the GST now. And that's why we had an announcement of the appellate tribunal. Until now, we didn't have an appellate tribunal in place. It was just recently announced. So a large number of them are actually tax related. And moreover, whenever you have that, you have government as one of the parties, either defendants or as the complainant.
Got it. If you look ahead, I mean, again, whether you look at it mathematically and or otherwise, one is how could we accelerate the speed of judicial recruitment, and could it be done, and is there something else holding it up or traditionally has been holding up? And secondly, if we were to reach that, realistically, how fast could we clear up most of our backlogs?
Yeah, so the way to do this, first of all, this has been suggested for several years and there's some progress that if there are cases, just to again give you the example of the tax litigation, it so happens that the tax officer, even if you have lost the case at the tribunal level, meaning the verdict is in favor of the taxpayer, they have to kind of automatically go into appeal because they are vulnerable to an accusation of corruption. That you did not pursue this case vigorously, you did not go into appeal because you had some private quid pro quo with the taxpayer. And that's the way it's a very skewed kind of incentive. So the incentives are such that it is safer for the tax officer to just file an appeal. We need to address this incentive system, that it should not be the case that the tax officer is obliged to go into appeal and go into court. So there is something I mentioned in the article of Settle or Explain, that there should be a compulsory recourse to arbitration, out of court settlement. And in case the case is being taken by the government officer to court, there should be a mandatory settle or explain, like settle the matter or explain why you need to go to court. So there's one filter. Secondly, we can also look at the amount involved. So there are two filters. Amount below a particular threshold, it should be settled out of court. Or if it is a matter more than X years old, suppose the matter is more than 4 years old. So they can do a combination of the two, the disputed amount and also if it is the age, the vintage of the case. So we can just say that to be deemed to be settled. Now, I remember that in one of the interactions a few years ago with the finance minister, The minister said, oh, well, we are happy to do this, deemed settlement. The dispute is deemed to be settled. But we don't want you to come back and accuse the government of helping its cronies. So, yeah, it's kind of a tongue-in-cheek comment, but I think the government is prepared to go this way. As far as judge recruitment is concerned, surely the way to do is to increase the amount that we spend on the judiciary. On average, at the aggregate level, we are spending a measly 0.59% of government budget. That includes union government and state governments. So that's a tiny, tiny amount. That comes out to be a per capita spending of 182 rupees per person. If you think that judiciary is an infrastructure, like we are spending on physical infrastructure, we have that Rati Shakti, or we have those huge infrastructure pipeline of 100 lakh crores and so on. So if you work it out, by comparison, the per capita spend on physical infrastructure works out to 15,000 rupees. Very high number. And we are spending only 182 rupees on judiciary. So I think the very first thing we could do is increase the budgets available. So the reason the sanctioned posts are not filled is sometimes lack of, budgets. So the one way to fast track is to increase the budgets. And secondly, of course, the judiciary itself can use various techniques of fast tracking. I mean, there is a whole recruitment machinery, but there's also a process by which bar to bench movement. We have had people move from the bar to the bench. So both these things can be fast tracked. And not to forget that outside the court, the process, there is also ADR, arbitration dispute resolution. So that also has to be encouraged, not merely encouraged, but give it more strength. And then there are other specific things to be done, which involves using more digital infrastructure, using AI now for at least the scheduling processes, basically use of digital techniques and AI. That again requires, by the way, a budget to kind of upgrade the infra to be able to handle the work faster.
Right. Last question, Ajit. So some of this could be linked to talent and finding the right people in the case of judges at various levels. Do you feel that we are good on the pipeline?
Well, we have a national law school system, which can also be just like we have gone to almost from 5 IITs, we went to 23 IITs, to increase the engineering pipeline and science and technology. Similarly, I think there is a case for increasing the legal education, these kind of national law universities. There are a lot of private universities. So I think the pipeline is there. We need to increase the supply of, that's the legal profession. So there may be something specifically focused on training of judges. I think recruitment is not that difficult a challenge. We just need to do it faster and allocate more budgets. But one quick thing, Govind, I want to mention that all this has an economic channel. I said it affects ease of doing business, it affects investor sentiment, investor confidence, it takes up managerial bandwidth, if your people are spending time in litigation. So it has real economic impact.
Right. And therefore, we should renew our focus on it. Ajit, thank you so much for joining me.
Thank you. Thank you, Govind.
Accenture to target non-AI ready staff. Consulting major Accenture has set out plans to lay off staff who aren't able to reskill on artificial intelligence amidst a broader restructuring strategy, which will see the company prioritize its AI efforts, according to a report in CNBC. The roughly $70 billion Accenture, which grew about 7% from last year, said in a call on Thursday that as advanced AI becomes a part of everything we do, it expects employees to retrain and retool at scale. CEO Julie Sweet said that that's Accenture is investing in upskilling our reinventors, which is our primary strategy. She also said that the company is exiting on a compression timeline, people for whom reskilling isn't a viable path. On the other hand, Accenture has apparently reskilled about 550,000 workers on the fundamentals of generative AI and outlined a 6-month, $865 million business optimization program, which detailed costs associated with severance and headcount reductions, though it's continuing to hire and has beefed up its AI talent with 77,000 people employed, AI and data professionals in 2025, up from 40,000 in 2023. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.